In the currency quadrant, taking a look at the December Japanese yen, which gapped lower today by 0.48%. That's from Friday's close to this morning's open. The yen then rallied but never got above the flat line, starting the week lower and completing its fifth session lower in the last six, and starting off its 6-week lower in the last seven, although obviously there's plenty of time left in the week for a turnaround. The high today, 66.03, was still a gap lower of 13 basis points from Friday's settlement, which was 66.11 half. The low today, 65.39 half. That was down 1.09%, taking the yen down to the lowest level it's been at in 3 months. And then as we got into the New York close, we were still down over 0.6%. Japanese elections put out a little bit of a surprise for the markets. Japanese ruling party lost its clear majority, causing uncertainty in the overall economic condition of Japan, obviously the political side of it, and then causing uncertainty in the yen itself. You actually saw some companies in Japan rally off of that, thinking that it would be good for their export business as the yen continues to get weak. But any kind of uncertainty definitely hits the currency first, and it did so this morning. We also have yield differentials with the with U.S. yields continuing to strengthen while Japan's are either flat or heading lower. For example, the Japanese 10-year is only up about 3 basis points today and 2 basis points last week. Across the curve, or let's just look at the 10-year specifically, the U.S. yield is up 4 basis points today and 16 basis points last week. Two things that drive currencies. The idea that when you're buying a currency, you're buying a theoretical share in that country's economy, and the election puts some uncertainty in that particular equation, and yield differentials, which are clearly moving in favor of the US dollar, weakening the yen.